We'll go from 70 to 100. We'll be writhing around and everyone will be like, oh my goodness, at the top, it's going to break out and then it'll collapse. And then at 70, people will be like, oh, the bear market's over, and then it'll explode again. And so I think we're in that period.
Okay.
And then when we go through the highs, we'll head up to, I think, 180.
According to Tapiero, is a volatile consolidation phase. After the euphoric breakout toward 100K, we may spend months oscillating between 70K and 100K. This period will wear on investors' emotions. At 100K, the market will scream breakout, only to reverse. At 70K, fear will dominate again with cries of a new bear market. This is typical in crypto, where 1 year of activity can feel like 5 in traditional markets. It's a psychological and emotional gauntlet, one that rewards patience.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I've been thinking about 180 on this cycle. And I'd always thought, even in 23, 24, we're going to head up to about 100 and then we're going to stop. And people were saying to me, well, Dan, why are we going to stop? This is when we were at 20, 30, 40, 50. I was like, we're going up to 100. We're going to break through 60, which was the old highs from 21 or 65. And then we're going to stop at 100 because financial markets like to stop at big round numbers. You know, the Dow stopping at, 10,000. Or the S&P stopping at 1,000 or NASDAQ. And it just, I don't know that it makes a lot of sense. There are a lot of things about markets that are irrational and don't make sense. So you have to, if you've been in the markets a long time like me, you have to accept that. But I think 100,000 is a number where people who have been long for a long time, from $1, 100, from 1,000, where they in their mind just said, if it ever gets to 100,000,
I'll sell.
I'm going to sell some. And I'm not going to necessarily sell all, but you can imagine if you'd owned this at 200, 500,
Not bad.
And if you bought it in 2019 at 5,000, 6,000, 7,000, even if you bought it at 10,000, you're like, you know what, if it goes up 10 times, I'm going to buy that house, that I've wanted to buy. So there's a natural, I think, selling ceiling that will take time to digest. Now, I mean, weeks, months, I don't know. I just knew that at 100.
We slightly passed 100.
Not really. It was just a spike up. 100 has held it. And then I think you go up and down between 70 and 100 for months, everyone gets exhausted again. And people in this space, as you know.
And that's where we're at.
Yeah, they're exhausted. Because 1 year in crypto world is like 5 years in the old world.
I know.
And if you live through if you live through 2 bear phases, it just...
You get gray hair.
You get gray hair. It's exhausting.
Yeah.
So, again, we'll go from 70 to 100. We'll be writhing around and everyone will be like, oh my goodness, at the top, it's going to break out and then it'll collapse. And then at 70, people will be like, oh, the bear market's over, and then it'll explode again. And so I think we're in that period.
Okay.
And then when we go through the highs, we'll head up to, I think, 180, which is 3 times the previous peak. That's sort of in 20, that's sort of in 21, the 21 peak was 20,000. We then went 3 times that peak. In 2017, 18, the peak was 21,000. We then went 3 times that, 60,000 in 21. And now I think we go 3 times.
By when?
I think we should buy, within the next year. Yeah, within the next 1 year or so.
What's your selling point?
So, well, I don't think about, I have mine off and I don't think about it. It's more about time. Like I think 10 years. I mean, I don't really have one. I think we can get to 1 million on Bitcoin in 10 years. And I think it'll stop there for a while.
Yeah.
1 million, 10 years. So that's $20 trillion of value. And I think that's the right number. The fund that we're launching now, 50T, is a view that 10 years from now, we have 20T in Bitcoin. We have 10T in all of the other alternatives outside of Bitcoin. And then we have 20T, and this may be optimistic, but I hope, in all of the equity and businesses involved in the space. So what isn't a cryptocurrency, you have all of these businesses and all these other activities that I think that the parts of the traditional world will merge with the digital world. And so there are companies today that are in the traditional world, that I think will 10 years from now be considered digital businesses. Blockchain oriented. Right. Their whole businesses will be on the blockchain. They'll be blockchain businesses. Yeah. And so that's 50T, 20, 10, and 20 added. 40, I think 10, the value 40. Of Bitcoin at $1 million per Bitcoin is $20 trillion.
Okay, yes.
The value of all non-Bitcoin cryptocurrency, I think, will be another 10 trillion.
Okay.
So that's 30 trillion. And then
total will be 50 trillion.
And then 20 more for all of the businesses that'll be active in the digital asset space. So that's how I think it sort of spreads now, and it starts taking over all the traditional world businesses, not just financial businesses. Yeah.
The existing market cap right now is like 2.7 trillion.
That's just of the cryptocurrencies.
Yes.
It was around 3, and then the businesses, I would add another trillion.
Okay.
If you include what the value of Binance is, and if you add all them up, it's probably another trillion. So it's like 4 now. It was 5.
So it's like
a few months ago.
13x from where we are currently then.
Well, I would say a 10x. I'm thinking from where it just hit 5.
Sure.
5 going 10. Okay.
Despite being a longtime gold advocate and co-owner of a gold business, Tapiero admits that gold can't keep up with Bitcoin. While he still holds some gold exposure, he acknowledges that gold is a hedge for the old world, while Bitcoin is the engine of the new one. He highlights a stark contrast. The average age of gold investors is 50 plus, while the average age in crypto is 30. The energy in the crypto space is palpable. There are major conferences every week, global meetups, and endless innovation. Meanwhile, gold is stagnant, slow-moving, and frankly, aging out.
To me, Bitcoin and the digital asset world is, I would say, a hedge against the old world. I think that if you look at any digital asset, it's outperformed anything in the traditional world dramatically over the last 10 years. And this is something that is very hard for people to understand. So what do I mean? If you go back 10, 11 years ago, the NASDAQ, which has done very well over the last 10 years, is actually down about, over 99% against Bitcoin. It's also down 99% against Ripple. It's down 99% against a lot of digital assets that you might not even think are worthy. And so I find that very interesting. It's almost, I see the digital world holistically, the digital asset ecosystem. That's Bitcoin, Ethereum, all the alternative alt currencies, if you want to call them that, or alternative protocols, other blockchains, and all the equity of the businesses in the space. And so that whole world has been appreciating against the old world of real estate, stocks, bonds, in a really dramatic way. And so I have that sort of really from 20,000 plus feet up perspective on, and as an investor, it's more of an investment perspective. I want to be in the next 10 years in things that are going to appreciate the most. And I think you're losing tremendous purchasing power if you keep all of your assets only in the fiat world. So gold, for instance, which I love and which is a hedge to the traditional world, gold will also go down tremendously versus Bitcoin, ETH, and many of the other assets in the digital world.
So have you segued away from gold then?
No, I still have my exposure, and I'm still own my share of that business, and I participate in board meetings. I'm not active in it. I don't know that I was only active at the founding and a little bit afterwards. And I think many gold guys have a little bit of Bitcoin, but the thing is that's really different about it is the average age of the gold owner has got to be something north of 50 or 60. It's a very old market. And Bitcoin and the digital world, the average age is like 30. And there's a lot of energy there. And I think, sometimes you read on X, people talking about, we, the OG Bitcoiners, and I don't mean me, just generally OG, we memed Bitcoin into existence. We willed it into existence. And I think, things move as a result of energy. And the energy in the gold space is weak. It's not great. It's older people, guys who've already made it. There's no dynamic interaction. I mean, in the crypto space, you've got a conference every single week, and there are thousands or hundreds of people.
Side events,
you can't even go side events. You go to Singapore 2049, there are 800 side events in 2 days. There is so much energy. People really, it's not just pushing a narrative. People have committed their life to Bitcoin, becoming an integral part of the financial system and our whole economy. And it's even bigger than that. And if you listen to Saylor, sometimes people think, okay, well, he goes over the top a bit much. He's, micro strategy or strategy is, it's over leveraged or this or that. Forget about all of that. Just listen to his. I was at DAS last week and I heard his, 21 points to be in Bitcoin and it's really brilliant. It's very tight, very clean. It's a very thoughtful, intellectual approach. Even I, after sitting there listening to that, thought, oh my goodness, I don't have enough Bitcoin. I mean, how is it possible? Or I don't have enough exposure.
Right.
I do. I don't have any exposure in the old world anymore, except for gold and, a little bit of real estate. I just don't, because all of those assets have depreciated a lot against everything else that I have that's in the digital world. So that joke on X, sell a kidney and and DACA your Bitcoin. It's extreme, but you go in and you listen to Michael, and his argument's just so clean and tight now. Like in the beginning, I think he was, a little ebullient and, very emotional about it. And I think that's wonderful. That's what's driving it. But it's just such a refined argument. So the energy that a guy like that has and the thousands of people who came to listen to him or to hear Trump at DAS as well. I mean, that audience was packed. I mean, it was incredible. You don't have that at a gold conference.
Tapiero believes that many of today's traditional businesses will evolve into blockchain native companies. Over the next 10 years, we'll see a fusion of legacy finance and the digital world. Insurance firms, banks, real estate platforms, logistics networks, many of these will become blockchain-powered enterprises operating within the decentralized framework. This explains the $20 trillion allocation he predicts for blockchain-based companies in his $50 trillion vision. It's not just about coins and tokens, it's about building an entirely new financial infrastructure. Please like and subscribe.